G'day folks, Jim here again from FX Charts. I thought I'd do a quick video on a medium to longer term outlook for the major currencies against the US dollar. And so with that in mind, I'll go straight to a US dollar index chart, which shows that I think the dollar's got some legs and we might have a little bit of upside. So if we have a look at the weeklies to start off with, as you can see, really it's been chopping around in a sideways fashion between sort of 84.70 and 79 really for really a couple of years now. But it does look to me as though the weeklies, and also we'll have a look in a second at the dailies, both have a little bit of upside momentum, and the weeklies have broken above the descending trend line here and might have a little bit more top side. We've got to get up above this 81.05 level, which is the 100 week moving average, and above that then we've got sort of 81.20, which is the first major FIBO resistance. If we have a look at the dailies, we can see that we closed the week above the 100-day moving average, and do look as though, as with the weeklies, that we are building a little bit of upside momentum, which I think could potentially take us up here to around 81.20, with a break taking us up to around 81.5. Now I suspect it's going to be reasonably choppy. I wouldn't be getting too carried away, but the dollar does seem to have some reasonably good momentum building, and if we get some decent data out later on this week, then the dollar could continue to drive a little bit higher. We've also got the FOMC minutes, so a lot will hinge on them, and of course later in the week the non-farm payrolls, where the estimate's anywhere between 190 and 220,000 jobs created. Now, if we now go to the euro chart, we can see that the euro, having topped out, as I said in this morning's video, at that 138.92, which is major trend resistance, as we can see on the weeklies going back to early 2008, topped out there, is reversed, and it looks to me as though we're going to go down here and test this 135.45 area, which is the rising trend line, the 100-day moving average. There's a couple of FIBO levels there as well. It looks to me though as though the momentum is heading a bit lower, and that we might take out those levels and head down towards the low 134 area. Now, as I said earlier, that this is going to be strong support. And given the way the euro's traded over the last couple of years, we probably shouldn't expect too much of a directional move. But I do kind of fancy the dollar to make a little bit of ground up over the next few weeks. So we've got the 200-day moving average down here, just above 133. Now that conveniently is where, if I go to a weekly chart, that's conveniently roughly where the 200-week moving average comes in as well. So if we were to head lower, I'd certainly be buying my euros back at above sort of 133. Don't think we're going to get there yet, and that realistically, if we saw this sort of 134.30, that's probably going to be it. Bit more consolidation perhaps, and then another leg lower. Now, as long as the euro stays under this trend line here, I do prefer selling rallies. Above there is a different matter, and that could take us a fair bit higher. But we'll deal with that nearer the time, and until then, I really think 139 is the absolute limit on the top side. So moving along to dollar yen. Right, well, dollar yen, as I say, that topped out last week at 105.40. So the barriers at 105.5 remain intact. We've had a bit of a correction down to just above 104. Now, I think for the time being, we're probably looking at a continuation of this choppy trade. I don't think we're going anywhere too far early in the week, but in the longer term, the uptrend remains firmly intact. As we can see, we've done a little bit of damage on Friday, but nothing major. The daily indicators do point a little bit lower, so I think we could potentially see a test down to 103, 103.5 or so. If we do that, though, I think it's probably a buying opportunity. as far as dollar yen's concerned, the market's fairly closely focusing on both the BOJ's economic policies and also on US bond yields. And the 10 years got above 3% late last week and looked to be possibly headed higher as we go into 2014. So that should underpin the dollar in the medium term. So the top side, we've come up, we've tested, this is a weekly chart now, we've tested this important Fibonacci level at 105.40, which is the 61.8% of the whole move down from 124 down to this sort of 70, where was it, 75.5 area. We've now tested the 61.8%. It's not going to be easy to break. Where do we go if we do break it? One has to bear in mind that the momentum indicators do look as though they're running out of steam somewhat. So I think the easy money's probably done with for now. But if we do break 105.5, then if we look at this, I'm afraid that's all the data I've got. This is a monthly chart. At 107, just above 107 here, is the 200-month moving average. Now that's going to be pretty strong. So given the indicators, the monthly indicators are becoming overbought as well. I think that 107 level is going to be pretty tough to break, and therefore it wouldn't surprise me to see the first half of 2014 probably trading, say, a 102 to 107 range on the wide, but I'd certainly be taking profits up here. There's plenty of company of those who are short the yen, both against the dollar and on the crosses. So I think the upside is going to prove a little bit sticky, and I'd be a bit surprised, at least for the time being, to see us go above 107. If wrong, though, then the next real level is be up here, sort of 111, 112. I think we've got a while before we get there yet, though, and so as I say, I'd use 102, 107 as a range. Moving along to sterling, and right, okay, sterling. So that along with the euro, that made a 2-year high last week up here at above 166. If we go to the weekly chart, we can probably see that a little bit more clearly. Last got up here in 2011, and it's come off quite sharply since then. And with the daily indicators pointing lower, I think the initial move is to the downside, so I prefer to be selling rallies. There's good trend support here, though, at 163, the low 163 level, and once again below that at around 162.70, which is the top of what was formerly the channel that we were trading in for really quite some time, since sort of, I don't know, 2008-9. So we could come back and test that. But overall, sterling doesn't look too bad to me, and if the UK numbers continue to improve, sterling should stay reasonably underpinned, particularly against the euro, I think. Now, the weekly indicators are a little bit inconclusive. Maybe they're rolling over to point a little bit lower, but I wouldn't be getting too excited on downsides. So if we saw it down to 162 3/4, and I think there's a good chance that we could do, then I'd be preferably a buyer, I think, for another run to the top side. Now, where would that take us to? Well, let's go to the weeklies. So last week's high in sterling was at 166.02. Now, if we go back 2 years, this high was 166.17. So that's going to take quite some overcoming. But if we do, then this first red line here is not till about 167.37. I can't get it exact, but 167.37 on the charts. And that'll be important resistance. Now, that's quite some way off at the moment, given that we're trading at 164. So I think we're probably going to be in for some more choppy trade. But as I say, I'd be a buyer at sort of just under 163, probably a seller at sort of 166.5, 167, and look to trade that range, much in the same way as I think the euro probably heads down to sort of 133. And probably has a top at 138, so I'd look to trade those sort of ranges really for the next few weeks anyway. Moving along to dollar Swiss. Well, the dollar's been trading in a channel, as we've been speaking about for a couple of weeks now, and it did try the bottom side over the Christmas period, held on above the lows though, and has rebounded. We can probably see this a little bit better in the weekly charts. Let me blow that up a little bit. So we are moving a little bit to the upside, but there's no real momentum at the moment in the dollar. I do think we are possibly headed a little bit higher, basically on the back of, I think the euro's a little bit weaker. But we're going to run into some resistance up here around this sort of 90 area. But if we can get above 91, the figure, then we might head back up towards this FIBO level at around 92. We've got a series of higher lows. And the daily momentum indicators do point a little bit higher. So for the time being, if we go back to the 4-hour charts, what I really prefer to do is be buying a buyer of dips down to around this sort of 90.50, somewhere between 89.85 and 90.15. If we can buy dollars there, then I think we're possibly looking set for another run to the top side. Once again, I can't get too carried away. I do like the dollar, but I wouldn't get too carried away on the upside. And suspect that the next month or so will be reasonably choppy again, but with a slightly higher bias bid for the dollar. Okay, so moving along to the Aussie, which has really done nothing over the Christmas period. It's traded sideways until last Friday, 4th of January, I think it was, where it did get up to 90, but it didn't last up there very long. It's come back here. And it is currently opening the week at 89.75. Now I do the 4-hour charts are a little bit inconclusive, but the dailies do look to me as though they're trying to pick up some momentum for another test of the top side at 90, the figure. Now we can see it easily on the 4-hour charts. If we can take out this 90, the figure level, then I suspect we're heading up to this sort of FIBO level that's around 90.40. And if we can break above there, well, we could go back up towards 91.75. That's a long way off yet, though. There's plenty of interested sellers. And I don't think anything's really changed. The trend is still low, despite having broken out of the channel on the top side. As far as the downside targets are concerned, well, they remain unchanged as they have for quite some time. It may be that we've seen a base at 88.20, I think it was just before Christmas, early December. But my longer term target is for this head and shoulder that we were watching since way back here really. That is at around 87.80. Now we've got this long-term channel which we can see easily on the weekly charts. That's down at around 87.5, as well as this previous low right back here in 2009 at around 87.60. So that's going to be very strong support, and I would be buying back my shorts before then. There's a lot of people talking the Aussie a fair bit lower. We've got the next FIBO support, well, the 50% pivot really to 85.40. That's the move up from 60 cents all the way up to 110.80. So that comes in at 85.40, and I wouldn't be looking too much beyond there for now. My own preference would be to see a bit more of a squeeze back up to the top side here, back up to sort of 91.5 cents, and then see another test of the downside. But overall, I think that looks fairly choppy. On the indicators though, the downside does look to be running out of steam a bit. We have made newer lows, but we've got some bullish divergence here. So once again, as I say, if we do set it back under 88 cents, I'd be looking to square up and possibly even go long for a quick run higher. In the very much longer term though, I would stick to the channel until anything breaks on the channel. Stick to that. I don't think the top side's not a worry at the moment. But I'd use this base as a guide and possibly buy dips, as I say, for a bit of a rebound should we get down there. The Kiwi, well, the Kiwi's difficult. I wouldn't get too involved. In the short term, we have broken above the recent channel that we've been up to 83.20 now. I think that's possibly fairly toppish, except for the fact that the indicators do suggest, the daily indicators do suggest we might want to try a little bit higher. The weeklies though are pretty inconclusive, and I wouldn't be surprised in the least really to see some more of this choppy trade. with the one caveat that we have got the RBNZ, as I said in this morning's video. The market's looking at them to raise rates in the first quarter of the year, so we could see a bit of a break to the top side. 81 3/4. This is 81.5. This is the 200-week moving average. The 200 days is at 81 and it's 81.60, and the 100 days at 82. The figure. So there's plenty of support on the downside, and I think on the top side, if we saw it up towards this level up here, which is at around 84.30, I think that's probably a decent sell for another move back into the congestion area. Keep an eye on the Aussie though. We've also had George Soros, of course, coming out over the weekend saying that he thinks one of the great concerns for the year is a major slowdown in China. Now that's going to take a bit of wind out of this, any steam on the top side for the Kiwi, should we see it. So all in all, I think more choppy trading, possibly with a slightly higher bias. I'd buy it at 81.5, sell it at 84 for the next couple of months, I think, until we see otherwise. So that's about it for a longer term outlook. I'll come back and do another video during the week on the crosses and see what we think of those. So in the meantime, hope that's of some help to you, and we'll talk to you later. Cheers. Bye.